Good morning, it's Friday the 26th of June. It's Lane Clark here. Often our clients ask us many questions, and one that comes up in particular is where do we feel a particular currency will be, or a particular currency pair will be in 6 months' time, 9 months' time, or even 12 months' time. What we say to the clients is very, very simple. Yes, of course we have fundamental beliefs, but ultimately, with how we trade, we're technical traders, and therefore we're looking at the markets from a technical perspective. So if euro was to go up for 2 or 3 weeks technically, fantastic. If it's to go down for 4 or 5 weeks after that, again, fantastic. If our technical signals are suggesting buy and sell euro, then obviously we'd be on the right side of that market. So although fundamentally right now, people believe US dollar is probably the stronger currency out there if we're looking versus the euro and the pound, really because the monetary policy seems like it's tightening quicker than the other countries. Bear in mind from a fundamental perspective, lots of things can and do change. You may get rogue announcements from a central bank. You may get changes in the interest rate cycle that nobody was envisaging previously. So this is why we'd say that yes, you can call the fundamentals as of today and looking forward, but it's very, very hard when you're looking as far forward as 6, 9, 12 months. And it's why we trade like we do. We're technical traders looking for short-term movements. When I say short-term, I don't mean day trading. I certainly don't mean scalping. That's not what we do. We talk to our clients in regards to trending for them over 2 or 3 weeks period. If euro goes down for 2 or 3 weeks, fantastic. If it goes up for 2 or 3 weeks, like I said, exactly the same, fantastic for us if we're on the right side of it. So when we build our biases, we're looking for movements in that sort of short to mid-term time frame. And if we can take advantage of that climate, excellent. Now, ultimately, where we are right now, leading on to that, I've been talking for quite some time that we are currently euro weakness. We still are, but that's been phased down slightly now. From a technical perspective, we're still looking for euro weakness, but not at the levels we have been over the last few days. We are still also looking for US dollar strength, and we envisage some weakness in commodity type currencies like Aussie dollar and Canadian dollar, even more so than the euro. So as of right now, dollar strength, again pound strength, euro weakness, but not as much as we've seen, particularly Aussie dollar and Canadian dollar weakness. Now, one note I would make on euro is the ongoing Greece debacle. People are saying this morning on many newspapers, TV programs, Bloomberg for instance, they're saying that the sentiment out there right now is if Greece are to leave the Eurozone, sell the euro. But at the same time, if Greece are to stay in the Eurozone, sell the euro. Sentiment is bearish, but from our perspective, technically, like I said, we've reduced that bias slightly, and we feel it's the right thing to do, looking at our graphs and our charts, but as well as that, going into a weekend when you really don't know what will happen in regards to finding a resolution, you may see gyrations you weren't expecting, and therefore, in our opinion, follow our technical methodology, reduce that bias, and build a portfolio that can hopefully perform in any market climate. That's our job. Sometimes we'll obviously be wrong, sometimes we'll be right. If we continue to follow that high probability methodology, we're confident in success. Anyway, if we don't speak again, have a fantastic weekend. I look forward to speaking to you next week.